So equity markets have had a very interesting quarter. Going into the quarter in March, of course, there was a pretty meaningful sell-off in stocks related to the war in Iran. Investors were very concerned, very fearful, and stocks encountered close to a 10% correction in the S&P 500 before enjoying a very powerful recovery. And so really the key behind the rally or the recovery, even though the war was still playing out in the background, is that we've seen a tremendous improvement in the earnings outlook for the S&P 500 and even equity markets around the world. And really what's happening there is artificial intelligence. So all the excitement around artificial intelligence, all this spending to build data centers and additional compute power is driving mostly technology stocks higher, and that's what has been really driving this rally. The rally, the other part of this rally that we've seen is that it's been very concentrated in a small group, really technology stocks, but within technology stocks, it's mostly semiconductor stocks that have been benefiting. These are the chip makers or the companies that supply the ingredients to those data centers and where so much of this spending is happening. And so at this point, a lot of good news is priced in on the AI story in particular. It's been benefiting regions with high exposure to artificial intelligence like emerging markets and the US in particular. And so really the key question from here for the direction of the stock market is whether or not this heightened or high rate of spending growth within artificial intelligence can continue. And so in our view, the tailwinds that are in place are likely to persist, continuing to push stock markets higher, but there is a vulnerability building here in the market in that valuations are high, investors are very optimistic, and a lot of good news is already priced in. So if there was any sort of slowdown in that artificial intelligence story, or if there was any sort of loss in confidence by investors around the promise of AI, then stocks can certainly be vulnerable from here.